Hello guys, and welcome to the White Rabbit Trading Channel. Let's dive in. We're starting on the weekly time frame, because this is where I see a very important zone. Essentially the main area where price can make a directional decision. It's quick and simple. If price remains above this zone, that's a positive sign and suggests potential for further upside. It's absolutely fine if price ranges here a bit or even creates some wicks to the downside. That's all normal. But if it starts closing below this key zone, then it opens the door to the lower part of the range, and we might see a deeper correction that could take more time to play out. That scenario can definitely happen, but my primary expectation is that this area holds as a weekly high or low. Only if this fails will I start looking lower. Now, let's take a look at the important levels in this region. We have a monthly breaker, which has been in play for months now, and a weekly breaker from the previous range. On top of that, we also have the point of control of the entire range, and the 0.382 Fibonacci retracement from the start of the move to the current high. So this is a standard retracement level, and it all aligns well. If I start seeing daily or weekly closes below this zone, then I'll move on to the next part of the plan, which is trading the lower part of the range. But that only happens if we lose this zone. Until then, I'm treating this upper area as support. Still, it's always wise to be prepared for both outcomes. That covers the weekly outlook and the higher timeframe support as it stands now. Now, let's zoom in and go to the lower timeframes. Inside these breakers, we have some interesting local levels. First of all, we have a potential simple SFP swing failure pattern of the previous low. By the way, this could also potentially trigger a monthly trade setup, but I'll update that in the Discord if and when it happens. Lower down, we still have our weekly and monthly breakers, our POC, and our monthly statistical level, mainly the average wick formation for bullish setups. I talked about this in the previous video, where we marked it at the beginning of the month. This level also aligns beautifully with our first parabola line, which originates from the beginning of the bull market. So as you can see, this is essentially the same area as before, but now with additional confluences. That's what makes this a strong level to watch for a setup. Best case would be strength and structure changes right at this zone. And in case it fails, the invalidation is very close. If we lose this level, it can start acting as resistance, pushing price even lower. That's what makes this such a good level to watch. It gives a clear invalidation and well-defined risk. Locally, we're also facing some resistance levels. Personally, I haven't been shorting here and I'm not planning to, at least not at the moment. However, since we have a daily structure break and a 4-hour downtrend, I might look to hedge my long position if we get a push into a 4-hour order block and I see weakness on the rejection, like structure shifts or bearish divergence as confluence. Of course, if price just breaks cleanly through, I'll stay out and just manage my long trade by taking some profit. Based purely on bearish structure, we could see a lower high forming right here or at the SFP of the daily swing high. So if price rejects in this area, we might revisit the lower levels we discussed earlier. And yes, there will be stops and bounces along the way, where I'll be looking to take profits, since price can easily range instead of giving a clean move. I talked about that in the previous video too. The monthly stats suggest we could simply be forming a bigger range, taking out the low, then pushing back to the highs, and then rejecting again to keep price contained. That's why I always trade level to level. So in case of a rejection here, the lower levels come into play. But if price reclaims this area, especially the daily swing high, then we open the door toward the top of the range where we have two more important levels: the previous all-time high and of course the new all-time high. From there, I'd expect a swing failure and rejection, which could give us a setup to trade back to the current support zone. First target would be profit taking at support, and then I'd watch for signs of strength to bounce, or signs of weakness to break lower and possibly enter a bigger range. All of this, of course, is range-based trading. If price just goes up without showing weakness, I'll ride the move and trade it with momentum. Okay, that was the weekly outlook, including key levels and lower timeframe extremes of the range. I hope that's clear. If anything is unclear, feel free to ask. Now let's take a quick look at the local move and the possibility of a short-term range forming. This is more relevant for lower timeframe traders and local setups. The idea here is, what if we get a local range before price makes any big move either to the lower or the higher part of the broader range? This isn't a prediction, just something to be aware of. It's important not to be surprised if it happens. Then, depending on your trading style, you can either trade it accordingly or just sit it out while it ranges. If you're focused on higher time frames, then you wait for deeper pullbacks or breakouts. For intraday traders, this could become a nice runner if the range plays out cleanly. I'll definitely be watching resistance and support levels and make sure to pay myself along the way. The next interesting level for me is the lower breaker. It's a level on its own, but it's also the point of control from the previous lunar cycle and the current local range. It also aligns with the average daily loss zone. If I don't get it, I just wait for the next levels, for example higher. One thing to note, Monday or Tuesday can often take out the weekend low, so if price starts hovering around this level tomorrow, I'll be prepared for another flush lower to clean that low. Again, this is part of the local range scenario. If price starts closing below this level, it could flip into resistance, and I'll watch how price reacts. That would be a signal either to take profit from longs, or look for weakness and a move down to the next level. Alternatively, if it reclaims the level, we could see continuation up toward the daily swing high and the 4H order block, which also has some nice confluence. If you go to the monthly chart and pull a Fibonacci from the candle close to the high, you'll get the equilibrium, another area of interest, especially since we have high volume nodes around there. This makes it a great level to look for setups. So best case, if we get a long setup at this level, the first target would be the local highs. From there, we'll reassess. If it rejects and retests support successfully, I'll repeat the same plan. If it breaks lower, I'll ride the trade down to the next level. The same logic applies if we break higher. I already took a trade from the 5-day order block and daily swing low, as I mentioned in the previous video. So I'll just hold that unless I see clear signs of weakness. Okay, that wraps up this quick update. I hope everything is clear and you know what to look for depending on which scenario plays out. It's not about predicting exactly what will happen, but being prepared for the scenario you want to trade. If nothing happens, I'll simply wait for the next setup. If a reaction occurs, I'll try to anticipate the next move that pays me. If price holds locally, then that's the setup I want to take and ride it higher. If it rejects, whether in the order block or not, I'll go from there with the same approach. As always, I'll keep you updated in the Discord or maybe on the Patreon page. I've now opened the Patreon, though I haven't posted much yet. But I plan to slowly start adding videos. The first one will be about market structure and order blocks, because that's the foundation of how I get my levels for trades. Once that's understood, it removes a lot of noise like which time frame to use or which levels matter and helps you see the market step by step with clear areas of interest and targets, depending on your style. So if you want to support what I'm already doing on Discord, feel free to join the Patreon. It's still empty, but I'll build it up over time. Eventually, I'll post structure videos, range guides, and explain how I do monthly statistics. You'll learn structure, reduce noise, and decide whether you need more tools or if structure alone is enough. I'll also prepare examples for high and low time frames so you can see how effective this method is. And no, I don't plan to make my own Discord because I don't need to. I like where I already am, and if we get a closed area inside the Cohen's Discord, that's where I'll post updates for subscribers. Well, if not, then I will do all my updates in the Patreon, at least the one where I explain more. Okay, that's enough about that. I hope the market scenarios are clear now for both higher and lower time frames. As always, if anything changes, I'll update maybe even later today if levels are hit, or tomorrow in Discord. Have a great weekend. That's all for this update, and I'll see you in the next one.